welcome. You're tuned into Buy Now, Sell Now on ET Now. I'm Shashi Sharma and with me today is Thomas Sarkar. And viewers, this is the show where you get answers for all your stock-related queries. In a short while from now, we will connect with our experts to get your stock-related queries answered by them. But before that, let's shift focus to one such company who did come out with the earnings, and that is Happiest Minds. This time, the numbers looked okayish because though the revenue has seen a jump, a double-digit jump, but that was actually in constant currency, that was a growth of over 11%, and that was led by the acquisitions done by the company. But on the profit side, if you will see, there's a decline of 29% on a sequential basis on the back of some of the one-offs. But let's understand more from the management itself that going ahead, what are the growth triggers for the company. And let me welcome Mr. Venkataraman Narayanan, who is the MD and CFO, and Mr. Joseph is also joining us, who is Executive Vice Chairman and CEO of Product and Digital Engineering. Very good morning, gentlemen, and thank you so much for your time. First of all, Venkat, I want to come to you to have your take on the numbers. It's been a solid 18% YY constant currency growth this quarter. But could you please break it down for us, like how much was the organic versus inorganic growth?
I would like to just hold on to that number and take that in. That's about 17.8% growth in year-over-year numbers in constant currency compared to where others are. It's a really good growth number that we have shown. We have been looking out for acquisitions for the last 1.5 years, and it just so happened that two of them happened this quarter. And we had good organic growth coming in from the numbers of Macmillan and SMI that we had acquired last year. So while not going to divvy between the two numbers, I would say overall good growth. We have shown great good growth quarter-over-quarter and year-over-year, both in top line and in EBITDA. EBITDA typically in these situations show a drop, substantial one of that, but here we are still reporting about 23.9% of EBITDA, and that's grown by about 7.8% year-over-year. The rest of the expense line items, there are quite a few one-offs coming up from the acquisition related non-cash charges and cash charges, which will hopefully get streamlined to the next quarter. So what I would think is good quarter, great number of customer additions, our average revenue per customer has gone up. So all the metrics are showing good traction in the and it's in the direction of growth and towards the vision of 1 billion that we have set for us.
Joseph, also if you could tell us how have the demand metrics evolved in the last few months, and segment-wise if you could talk more on the weakness in the manufacturing and the contribution from GenAI in this quarter?
We did have a little bit of a blip at manufacturing. I'll come to that. But overall, if we broadly look at the market, I think consistent with what others have been sharing, there is much more of a focused approach to investment, and this leads to opportunities but also demands that as a service provider we are prudent to the customer's needs and their priorities, and if we're able to position ourselves well and get the right offerings in front of the appropriate people, we're able to close deals. Generative AI business unit is off to a very good start. We've reported around 855K of revenues in this quarter. And to add a little bit more of quantitative and qualitative color, the number of conversations with customers was around 50 to 55 during the quarter, and we've had around 15 customer POCs and projects. And what we are looking to do out there now is to convert these POCs and I would say discovery exercises into larger implementation engagements. From a geo perspective, I think all the geos, if you look at our numbers at an absolute level, have grown. And we've added a couple of new geos in terms of the APAC region and Africa through our acquisition of Aureus and Pure Software. On the vertical front, The manufacturing, the blip that we see is we have had a couple of programs with customers in the manufacturing space that have come to an end, and the next version and other projects have taken a little longer. I see this not as a secular trend, but as account specific, and the expectation is that when we talk again next quarter, this would have rectified itself.
All right, but Venkat, I want to come back to you since you helped us understand that what are the factors behind your growth in the quarter gone by. But going ahead, will you be sticking to your 35 to 40% of the top line growth guidance with 20 to 24% margins, or any changes there?
So, Conversely, I think that's something I need to also correct. If you recollect, I didn't use the word guidance. I had said forecast because, we were in talks and we had already intimated the stock exchanges that closing is in progress. We thought the closing of Pure Software and Aureus would happen in the first month of the quarter, so enabling us to take revenues and participate in the growth of the whole quarter. But as things panned out, we have been able to close it slightly late because of certain approvals and parts of procedures that we awaited, which meant 40 days of Pure Software and 38 days of Aureus is what we integrated into these current financials. So with that, I think our forecast is about 30 to 35% growth. Whereas on the margin front, I had said 20-22% for EBITDA, but we are showing 23.9%. When acquisitions of this size, so we've added close to 25% of our size in terms of acquisitions. You are bound to have some unknowns. The others will get cleared out in the next couple of quarters. But all in all, it's a good quarter and a good foundation.
Lastly, Joseph, if you could also tell us what was that one-off impact on the net profit and any more such one-off costs that we can expect in the coming quarters?
Why don't I cover the one-offs? So you had two one-offs, One is when you do an acquisition of this kind, you get costs on related to acquisition. That's about 6.5 crores. Then you had certain one-time credits come in the previous quarter of about 13 crores. So if you look quarter over quarter on a sequential basis, that's a swing of almost 20 crores. To adjust for that and also account for some of the additional interest costs because of the acquisition and, write-off of intangibles which happen because of acquisitions, all of which should get paid off over the, 60 quarters. If you adjust for them, your profitability has been fairly in line with previous quarters and for sure previous year. Obviously, there is an investment that we have made, or we are making in generative AI. Joseph did mention about $855,000 of revenue, which is about 1.5%. But if you look at the profitability, that doesn't lead into an equivalent amount of profits. In fact, internal workings will show that we have invested about $1.5 million in this current quarter, including, revenue. We have spent almost $1.5 million. A lot of training happening, and we've got about 74 dedicated people, 100 dedicated people in AI. We are creating those POCs, and we are just ramping up on the revenue side. There is an investment that's gone into it. These are the various factors that have affected profitability. There is also one more thing. We have had our campus joiners. Last year we had about 400 plus campus joiners. This quarter we have added about 100 plus coming from the last year campus joiners batch. And they are slowly jumping into the utilization bandwagon, which is also causing a certain amount of dip in utilization. So those are the things which have happened on the the normal business as usual front. But if you adjust for all of this, we are on a strong footing.
All right, with this, gentlemen, we'll let you go, and thank you so much for making the time out and joining us today to talk more about the earnings gone by. So that was the management of Happiest Mind taking us through how are the numbers in the quarter gone by and what are the growth triggers ahead. The management continues to stick to their revenue growth guidance. But with this, it's time to slip into a very short break. Don't go anywhere as we come right back. It's time to take all your stock-related queries.